Hello, this is Robert. I'm an attorney with TRP, and we're going to be going over currently not collectible status for the IRS, what it is, when it is the best option, and how to get it. First, what is currently non-collectible status? Effectively, it is a payment plan for $0. The IRS determines your ability to pay them is nothing. The case sits in that status, but it can be kicked out a year later. Often it just sits till the debt is expired, but high income tax returns, something that's off the average of what you're filing, will kick it out. Or if your case is assigned to a revenue officer, they might just look at it again. Technically, the IRS can just send you a letter later on saying we want to go over your financials again, and either it'll go back to non-collectible or it might end up in a payment plan after that. When is currently not collectible the best option? When the income numbers meet the requirements, but there are assets that would prevent an offer in compromise from being accepted. Sometimes when there's debts close to expiring, it's the best option. When you do not want to do an offer compromise for other reasons, you don't want looking at everything as detailed as they do in that situation. In most cases, if you can get currently non-collectible status, you can also get an offer in compromise. That's pretty much what it is. And offer in compromise is the best option in the majority of cases. Because with an offer in compromise, you're actually done and it's over. With non-collectible, you're waiting for debts to expire. Often the best approach is putting it into non-collectible first and waiting until debts expire if there's debts that are expiring soon and then there's a gap. For example, if you owe a bunch of money on 2008 and it's going to expire soon, but then you also owe on 2015, then sometimes putting in non-collectible, letting 2008 expire, and then settling 2015 is the best way to go because you're kind of guaranteeing some of the money falls off. When you file the offer in compromise, you extend the time period the IRS has to collect. The downside of that is the lien issue it creates, which is when you get that debt expired, it's going to be usually not going to be able to get it withdrawn. You're just going to get a release on that lien. So if someone wants withdrawals on all the liens, you still might do an offer in compromise, even if it's going to expire pretty soon. How do you get currently non-collectible status? Well, the first step is find out if your case is in IRS collections or not. Most people reading this probably are in IRS collections and researching the issue. Your case will usually be in one of these three statuses if you have debts for a while and have done nothing. First off, it's not in collections. No final notice has been issued. There's still time before the IRS really does anything as far as garnishments or levies. Second, it's in the automated collection system. This is the standard collection system that most cases are in. So a final notice of intent to levy has been issued. The balance typically is under $100,000, sometimes under $250,000. You can be garnished or levied as long as 30 days has passed since final notice of intent to levy was issued. Now, in the collection system, there's another area that handles above $100,000 cases. I've seen that area kind of come and go on some cases. But they're in New York, and you may be assigned to that, quote, high dollar unit. Okay. The other thing is being assigned to an IRS revenue officer. An individual agent is assigned to collect and review your case. Typically, the balance is over $250, but some agents are still assigned to cases that are probably between $100 and $250. And then you have some lower balances that are usually related to payroll that they may be coming after. But generally, people are owing a few $100,000 and up when it's assigned to somebody, an individual collector like that. So how do you get currently non-collectible? The second step. You got to submit Form 433F or 433A with supporting documentation. Which form you file kind of depends on where the case is assigned. Okay, you're always going to want to send this by USPS certified mail with a return receipt. That's what we always do if we're doing your case. So if it's not in collections, you're going to prepare 433F and you're going to send it to where you normally file. They'll redirect it to wherever it is. They'll get a processing on it. They'll get it processed, and they'll send you a response. If it's in automated collections, you can call them at 800-829-7650. Now, that's not always the right number for every single case, but when you call that number, they'll redirect you to the proper area. And that usually a live person almost always answers that phone. You can request a hold on collections, and they may ask you for supporting. You can request a hold on collections to get all the information together, and then you're going to call them back. You pretty much give them the 433F over the phone, and they may or may not ask for supporting documentation. They're usually going to ask for supporting documentation on non-standard stuff like child support or receiving alimony, something that is not very clear. And even alimony, if it's on your tax return, usually they won't even ask for that. It's more things that are not shown on the tax return, and they're pretty much looking at the averages of your other tax returns, and if it doesn't match with the averages, then they ask for proof. Or they may just ask for proof otherwise, but that's usually the standard they're looking for to ask for documentation proof. The third thing is if it's assigned to a revenue officer, you're going to mail or fax Form 433A and supporting documentation to the IRS revenue officer assigned to the case. Sometimes they might try to get you to go in the office. Technically, they can have you or your representative go, but really, there's really no reason to. It's better to just fax or mail it to them, and most of the time, they'll just take that. So here's the downside of currently non-collectible status and some notes on it. So the downside is liens are filed against you if you owe over $10,000. Technically, they can file a lien for less, but they rarely do. These liens cannot be withdrawn if the debt expires. They just get released. The other downside is the debt does not go away right away like an offer in compromise. You got to wait till it expires. They could also kick out the status, find out you have a higher income, and then now request a payment plan. You can't sell items that have a lien without paying the IRS, and that's also a downside. Unless you get a lien subordination, that can be done for selling homes, things like that. But you're not getting any money out of the transaction. If you're getting money out of the transaction, they want the money. So in conclusion, this is the best option for people that have assets that disqualify them from a settlement, that have debts that could be expiring, or if they need to get a garnishment off right away. Otherwise, offer and compromise is the best way to resolve your tax case in almost all situations. So if you think this is something you might want to do, get it in. If you don't want to deal with it yourself, give us a call. You can reach us 888-515-4829. Again, 888-515-4TAX, or reach us at trp.tax. Thanks for watching. This is Robert. Have a great day.